Okay, I got a question about my trade yesterday on GBPUSD. This trader is asking, taking this trade when there was both weekly and daily fake out highs. To me, countering those is very difficult because I just don't understand how or what time frame counters another in an instance. Please, can you explain more on this? So this is a trade that I took. This trader has a bit of an issue seeing a fake out of the previous day high and the previous week high, and sometimes it can be unsettling trading right back into those fake out levels. So why did I take this trade? How did I take this trade? I think first I need to briefly explain the concept of my trading. So whenever I look at any time frame on any chart, I always see that the market is moving from swing point to swing point. This is my belief in the market, that all it's doing is just moving from swing point to swing point. And if this is my belief, then the most important thing for me to identify is when do these swing points occur. Easiest way for me to do that is by looking at the breakout bar, last breakout bar, in this case a bullish breakout bar, and seeing which peak did it break out of. So this peak that I broke out of, this is the breakout level, and this is the last piece of information that the market gives me that we're 100% bullish above that breakout level. Now, if price can get below that breakout level, then it tells me that the market rejected that breakout, and now we're bearish below that breakout level. If there is a breakout bar that closes in the opposite direction of that breakout bar, then this tells me that we now have bearish momentum and the market is now reversing its trend. Right? So this breakout bar creates a peak formation, and I'm always looking to trade away from that peak formation. And so this pattern right here, this is the reversal pattern. We have a breakout bar that creates the breakout level, and then we have a rejection at the top. Sometimes you get this rejection, sometimes you don't. But if you get a fake out of the peak, this is the first sign of a reversal. This is the breakout reversal cycle. And once we get below breakout levels, this is the false breakout move. I'm bearish below breakout levels, but it's only confirmed as a new trend if there's a breakout bar that has momentum to the downside. So this breakout bar reverses that last bullish trend. So this is the trend reversal cycle, right? A simpler way to remember all of this is just look for the breakout level flips. Breakout level flips only happen at swing points. It doesn't happen anywhere else on a chart. It only happens at a swing point. And it's impossible for a swing point to exist without getting right back below that breakout level, right? So this is the first thing that I'm always looking for to determine directional bias on any chart. I'm always looking for that breakout level. All this other stuff happens after I've identified. Sometimes I can catch that early if I see it, but in general, most of the time, I'm only looking for that breakout level flip. And I have created this indicator that'll be released when I do my course that conveys this concept. We have that breakout bar, creates a breakout level, and then once we have a breakout bar that closes in the opposite direction, creates a peak formation, and I'm looking to trade away. So these yellow bars, these are trend reversal bars. If I see that, I know that the trend on this chart, the weekly, is bearish. Over here, it's bullish. And this is pretty much just how I read the market. So sometimes you get these nice long swings, sometimes you don't. And depending on how all the other higher time frames look like, there might be a trade here, there might not be. But the main point is that all the large ones are going to have that move, right? They're always, all the large swing points all have that flip of breakout levels. So don't get discouraged if you're going to take trades here and it doesn't continue on, because as long as you just keep at it and stick with it, you're going to catch those big ones, right? So again, some of these swings don't go as long as you'd want them to, but the ones that do are really going to pay off, right? So don't get discouraged about taking any losses on some of these swings. And a lot of these are actually going to be part of a consolidation, but I'll talk about that in some other video. But for now, the main point is that as long as you trade in the direction of the breakout levels, you should be okay most of the time, right? So identify that breakout level. You're bullish above, bearish below. And that's pretty much how I determine directional bias on any time frame, by just looking at the breakout levels and peak formations. Okay, so that's the first thing. Second thing is all these swings in the market, right? I'm on the weekly time frame here. All these swings can be broken down into smaller swings. So every time frame can be broken down into smaller time frames. Every swing can be consists of multiple smaller swings. So on the weekly, I like to break it down into 5 daily bars. One weekly bar has 5 daily bars. And so if I look at the daily chart with those swings here, you can see that on the higher time frame weekly, we have that strong swing here. On the daily, it consists of multiple swings that are pulling back. And so the whole concept of my strategy is identify the higher time frame direction and then trade the alignment on the lower time frame. So every time that I see a swing point, a flip of breakout levels, I know that we're at a swing point here. I don't care about this one that's swinging up. These ones I don't care about. The ones that I care about are the ones that are going in the direction of that higher time frame. These are the ones that you're going to make a lot of money on. These opposite ones, sometimes they're going to be good, sometimes they're going to be bad. Most of the time, you're just going to waste some mental energy trading these ones. So only look for that alignment that's going in that higher time frame direction. Okay, so all of this can be seen in my chart. So the whole idea is identify higher time frame direction, the bearish move here, break down that time frame into smaller time frames. So on the weekly, I break that down into 5 daily bars. This is the daily, this is the momentum time frame for the weekly. And then on the daily, I'm looking for anytime I see a swing point, faking out a high, flipping breakout levels. This is when I want to get involved in the move, right? And so the same thing, I'm looking at breakout levels. If we're going in the direction of breakout levels, and it's going in the direction of that higher time frame peak formation, most of the time I'm going to be okay, right? And so looking at all this and looking at the trade that I took, just look at those breakout levels right here. Where am I here? On the 1 hour. I go on the 1 hour, looking at weekly levels. We have the previous week high. Price faked out the previous week high here. This is the first sign of a reversal. But that reversal is not confirmed until we get below the weekly breakout level. So we're still technically bullish here. Overall, we're bullish, but immediate price action is bearish. So when we have mixed bias like this, I need to see what's happening on the momentum time frame for me to decide which direction we're going. And on the momentum time frame, the daily breakout level is right here. So it's pointing in the same direction as the weekly. We're both pushing up as long as we stay above that. But we did fake out the previous day high. So we do have mixed bias here as well. Right? So I don't know which direction we're going, but overall, I am still bullish because breakout levels are bullish. So in this case, I want to drop down to lower time frames to give me more clarity. So whenever I'm dropping down to lower time frames, it's because I need to see more clarity in the move. And so here on the daily, setup time frame is a daily, momentum time frame is H8. I can see that the daily breakout level is bullish. We faked out the previous day high as well as the H8 high. We're above H8 breakout level, and over here is when we faked out the H8 low. So I don't want to reverse this move unless I get some sort of sign that we're reversing. And so this rejection tells me that it's okay to reverse this daily move, this daily fake out. Okay, and so there was a entry over here, but this is before my session. My session starts at London Open. This is when I know that we have volume. Before London Open, we don't have that overlap of sessions, so I don't really want to be trading these sort of times. But you can sometimes find some nice moves here, but usually I'm waiting for London Open. Didn't see anything right at London Open, so I wait for the H4 bar, which happens at 5 p.m. over here, and it just happened to be at the same time as the move here. And so this is why I took it. So I knew that we had volume. We had that rejection. We're above daily breakout level. We're above H8 breakout level. We're above weekly breakout level right here. So breakout levels all pushing up right in my trading window. And so this is why I was fine taking this move. So again, I'm always looking for that alignment with breakout levels. And you can see those breakout levels right here. These labels right here, these H2, H8 daily. This is a very quick way for me to know which breakout levels are in my favor, going in my favor or not. Okay, so that's one thing. Second thing, so here I'm in a different tab here. I'm looking at the daily swing points, peak formation. So on the daily, on the GBPUSD, I'm bullish here. On the H8, same thing, right? So every time this thing is pulling back, I want to be looking for trades to go in the same direction. So I know that we're bullish. And if breakout levels, peak levels of the daily and the H8 are aligned, this is when I know that we have unidirectional cycles. And these are when I know that this time frame is pushing strong. So the M15, I look at daily and the H8 levels. Daily is a setup, H8 is the momentum. And when they're both aligned, this is when we have strong momentum. Now, these are not entries. These are just letting me know that the M15 is trending strong. Now, sometimes, again, sometimes it's not going to be perfect, and this is because I can see some ranges here. But as long as you just continue trading in this, believing in this way of reading price action, you're going to catch these large moves, right? And so just as I went from the daily to the H8 and I trade those levels on the M15, market is fractal. So I can use any time frames. I can start on the 3 months, I can go to the monthly, and I could trade this combination on the daily. Right, so hopefully that made sense. I went from daily to H8 to M15, and now I'm going from the 3 months, which is the setup time frame for the daily, the monthly, which is the momentum time frame for the daily, and putting that both on the daily chart. And now you can see that we have strong trend momentum on these days, right? So these are the days that I want to be trading with trend momentum. Now, not all of them are going to set up. I need that specific combinations, right? I need that breakout, breakout, fake out. All of these combinations keep me out of all these like ugly moves here. But essentially, the whole idea is that once you have trend momentum, I don't believe that it's just going to move for one bar. Trend momentum means that we're starting a trend, we're starting a new trend. And so it's not just going to move one bar and then back down. I would expect if everything is aligned, all the breakout levels, all peak levels are all aligned, I would expect price to continue pushing in that direction from at least more than one bar. And so, yeah, so I was able to identify that move on GBPUSD. Another way that I identified it is actually this combination, breakout, fake out. Above breakout level, faking out the previous month low, price came down, rejected, and flipped monthly breakout level. This is that trend continuation setup. So my setups are also my entries, and yeah, everything kind of revolves around each other. And so I know that if this wasn't the daily chart and this was a 1 minute chart, this would have been an entry for me, right? And I would be fine taking this as an entry if this were a 1 minute chart. Now I wouldn't be holding this for 20 days. This is not my sort of trading style, but this would be an entry for me if this were a 1 minute chart. And so because if this were an entry for me, I do believe that price is going to continue pushing up. And this is why I'm okay with taking a trade like this that's faking out that previous day high and the previous week high. Is because I believe that that hard time frame was continuing to push. I believe that it was continuing to push. And so I'm okay taking it because we faked out that low above all those daily breakout levels. And I do plan to hold it for as long as I can. Okay, so hopefully that made sense. I think I fell off the rails a bit on when I was talking about trend momentum here. But I think the main point is that when I identify trend momentum, so let's use this one for example. When I identify trend momentum, it's not just for one bar. I expect it to continue. It's starting a new trend. It's momentum for a trend. And so I don't mind taking it and holding it. But I think the most important thing is where is that stop loss going to be? I always like to keep my stop loss as far away as possible. Um, in this case, we had did not have any entry at the low, but once it broke out of the previous week high, then I ended up looking for the move on the H8. So I started off on the monthly, right? Started off on the monthly, identified it on the monthly. This actually would be an entry for me, but wasn't able to catch any move here. And I don't like to trade directly on the H8. So I went from the H8 down and keep my stops as far away as possible. I want to be at the low of that trend momentum. So on the H8, I identified trend momentum pushing up. I want my stops as far as possible at the low of the current H8 that I'm trading. And for me, the most important thing is my stop loss placement. I don't care at all about the entry. Um, the entry is not important to me. The important thing is identifying the trend and where my stop loss is. The entry, I don't care at all whether it's On the 1 minute, 2 minute, 3 minute, 5 minute, doesn't matter at all to me how I get in. What I want to know is, did I catch trend momentum, and is my stop loss at the low of that momentum bar? And that's pretty much it. Okay, so hopefully that made sense. And if you have any questions, let me know.